Hello, everyone. I'm Matt Clark, research analyst with Money and Markets, and joining me is Green Zone Fortune's co-editor Charles Sizemore from the lovely vistas of rural Peru. Last week he was in Lima, the capital city of Peru. Today he is at his family's ranch in Peru, and it is a rural area. And Charles, if you don't mind, you can tell everyone where you're at, and we'll see if we can get a map to kind of tell everyone, to show everyone where you're at this week.
You just spin a globe and close your eyes and just, like where your finger touches, it's pretty much that far in the middle of nowhere. It's Paijan, Peru, spelled Paijan, a tiny little farm town on the Pacific coast. So it's nice. It's about as far in the middle of nowhere as I can possibly be, but it's nice.
It's a far cry from Lima, and definitely a far cry from Texas, where you normally hang your hat. But hey, it seems very quiet there. You kind of took me on an impromptu tour before we got on here, and it seems rather nice. So I think it's going to be a nice spot to I'm going to say get your work done, but I'm not going to presume to know exactly what you're going to be doing while you're there. But I kind of want to jump right into our topic today with investing with Charles. And I had an interesting email from a viewer who asked a question I think is on a lot of people's minds in terms of when you're preparing for retirement. And the reader's question was asking whether he should invest in his company's traditional 401k, which is something that a lot of companies offer. You invest, they match to a percentage, and then it just kind of grows and grows. Or should you look at kind of going the DIY, the do-it-yourself option, and use a Roth IRA? So I guess my question to you is, what are your thoughts on the differences between a 401k and a Roth, and which is best for which individual?
Yeah, well, okay, two questions. The first one, and they overlap because we've had the choice between traditional IRA and Roth IRA for decades. That's not new. For most people, the choice between a traditional 401k and a Roth 401k, that is relatively new. I also don't know if you can hear that, but a farm truck just went by. So we really are on the farm right now.
I can hear the birds, man, which is peaceful. I can't hear the farm truck, which is less than. So
a little bit less than.
Right. So back to 401ks and Roths.
Back to the modern world. So on the first question, you should almost always go for your employer plan, even though honestly they're boring. They're oftentimes pretty lame. It's a menu of mutual funds that you choose from, and that's sort of the end of it for the most part. Sometimes you do have the ability to do more than that, but the standard 401k is mostly just a menu of mutual funds. But that's okay because you get the employer matching. Like that really is the big one. Whether you're putting $1,000 or you're putting in, the maximum for, somebody, over 50, it's at this point, it's over, it's at $25,000 you can put into, you can put into a 401k every year. No matter what amount you're putting in, you're going to get, generally speaking, some matching from your employer. If you aren't participating in that, you're just leaving money on the table. So, every dollar you put in that gets matched one for one, that's a 100% return before you ever put a nickel into an actual investment. Just putting the money into the account, it could be a money market account, whatever, just a cash account. You've already made 100% on your money based on that matching. So for that reason, and really that reason alone, I've always said, do your 401k first. Now, the second question, if you have the ability to choose between a Roth option and a traditional option, which one should you go for? And, quick background, traditional 401k or IRA, either one, you get a tax break today. So whatever, dollar you put into that plan, you essentially get back your marginal tax rate as, I call it a return. It's not really a return, but you get that tax break, right? So if you're in the 20% bracket, you put that dollar in there, you're making, 20 cents on that tax break, right? That's with the 401k or the IRA. Now with the Roth, well, back up, but you get that tax break today, but then in retirement, when you need the money to live, you take the money out, you are required to take distributions, and then you pay taxes on it then. So it grows tax-free for potentially decades, or at least years. And, you pay taxes later on a much higher amount, and everyone's happy. Great. Well, the Roth is sort of the opposite. You get no tax break now. You put in after-tax dollars, but it's also like the traditional, able to grow tax-free dividends, interest, capital gains. It grows tax-free for as long as you want it. You're actually not required to take required minimum distributions on a Roth. And then when you do, if you take it out in retirement, you're not paying taxes on it then. So, okay, both sound great. Both are great both are great tax avoidance vehicles. Which one's better? For me, it comes down to one thing. It comes down to your current tax bracket. If you're at a stage of your life where you're not making that much money, or you're in a lower bracket because perhaps you have a lot of kids, like I do, or perhaps you, for some reason, you're in a lower bracket, whether it's because of high deductions or your income is somewhat depressed at the moment or whatnot. If the value of a current year tax deduction just isn't that great because you're in a low bracket, go for the Roth. If you're in a high bracket, if you're in your prime earning years and you're getting your rear taxed off here, then you don't really care about the future. Well, you care about the future, but the future is a problem for another day. You care about saving money on your taxes now. So for me, and this is somewhat arbitrary, for me, that cutoff is about 20%. If you're in, roughly, if you're paying about 20% in taxes, to me, that's kind of the break-even point. If you're paying more than that, go traditional 401k, get the tax break now, take advantage of that. If you're paying less than that, if you're paying 10, 15, whatever percent in taxes, then there's not much value in taking the tax break today. You might as well get it in the future when presumably you could be in a higher bracket. So, go for the Roth in that case. So kind of to recap, I say go traditional. If you're in a higher bracket, go Roth. If you're in a lower bracket, for me, the cutoff's about 20. That's somewhat arbitrary, but that's how I would do it.
So the bottom line here is the differences are with a traditional 401k, you have the benefit of an employer match contribution, which kind of bolsters it somewhat, and it's taken out pre-tax. The con of that is that you're going to pay the taxes when you start withdrawing it once you retire. With the Roth, there is no employer contribution there. It's basically just solely based on whatever you.
Well, no, there is. With the Roth 401k, your employer can match you.
With a Roth 401, with a traditional Roth IRA, there is not.
Yeah.
And then the pro here, if that is what matters to you, is that whenever you do start taking it out once you retire, it is not taxed because you've already paid the taxes once. You won't be paying the taxes again. So basically, the difference is employee contribution for one, and when you pay the taxes is another determining factor here. So has that kind of broken it down to its bare essential?
Yeah. Well, okay, we can. I can't really make a Venn diagram. That's really the wrong. I'm geeking out in the wrong way here. But yeah, to summarize like this: first question, 401k or IRA of either Roth or traditional. Always go with the 401k first, assuming there's matching. If there's no matching, it doesn't matter. But if there's matching, go for the 401k first. Second question, next decision down is, do I go for the traditional option or the Roth option on either 401k or IRA? It doesn't matter. Like on whichever vehicle you choose, am I going for the Roth option or the traditional option? And that really becomes a matter of, do I want the benefit today or do I want it down the line? It would be silly to take a 10% tax benefit today only to pay taxes at whatever 50% 30 years from now if you think you're going to be in a much higher bracket. So the key is kind of gaming the system there on, what bracket are you in today and what bracket do you think you're going to be in when you retire? If you think you're going to be in a lower bracket, then by all means, go for the Roth. If you think you're going to be, go for the traditional. If you think you're going to be in a higher bracket, then go for the Roth. Take that benefit in the future when your tax rate would presumably be higher.
I hope that answers the question from our reader. I certainly, it clears it up for me. I understand how it works now. And I think it definitely should provide those who are whatever stage you're at in terms of retirement, whether you're very early on as maybe in your 20s, or whether you're kind of like me in my 40s, or Charles in, I don't even know how old Charles is, but we're going to guess that he's in his 40s.
I am.
It gives you kind of a blueprint and some additional direction to look for when you're planning out what the best vehicle to use to retire is. So obviously, yeah, if the company matches, that pretty well answers the question for you. If the company doesn't match, then you kind of spider out into some potential options, but you have to answer some questions first. So if anyone does have a question they want me to ask Charles, or maybe a sector they'd like to cover, maybe a particular stock they'd like him to look at, to take his unique view and perspective of the market, do so. You can email us at feedback@moneyandmarkets.com. We'll put that address down below there. Also, don't forget, we do have a membership program where you do get exclusive insider information to the cannabis market. This could be exclusive interviews. We've got new things, new tools to use to help break down the cannabis sector, and different stocks there, as well as blog posts and other videos and things like that. We have a cannabis watch list. You can do that by clicking join down here on YouTube and finding out more about that. Charles, thank you very much for joining, and enjoy the scenery of rural Peru. And we will certainly talk to you again next week. And until then, for Charles Sizemore, I am Matt Clark, research analyst for Money and Markets, wishing everyone safe trading.